Hello students, welcome back. Today we will continue problems on determining whether the transaction will result in increase or decrease in working capital. Students, before I can proceed further, I want to brush up your memory. A transaction that involves current item, no change in working capital. A transaction that involves non-current item, working capital will not change. So working capital will change only if it is between current and non-current. So please keep these 3 points in mind. Point number one, current, no change. Non-current, no change. Current and non-current, working capital will change. So this is the second question in the series. State with reasons whether the following transactions result in increase or decrease of working capital or do not affect the working capital. A company issued debentures for rupees 2 lakh. So debenture goes, cash comes. So debentures are issued. The two accounts are debenture account and cash account. Debenture goes, cash comes. So increase in cash will result in increase in working capital. As I said you before, students, current assets, direct relationship, non-current liabilities, it's an inverse relationship. So increase in cash will result in increase in working capital. So what answer should you write in the exam? If you write this much is enough. No further explanation, no working notes required. Just write the statement enough. There will be an increase in working capital as cash balance will increase. Next. Creditors took over investment for rupees 17,500. That means creditors were not settled by cash, creditors were settled by investments. So the two accounts are creditor account and investment account. So creditor is a receiver of investment and investment goes out. Students, investment is not a current asset. It's a non-current asset. So therefore creditor is a current liability. Decrease in current liability will result in increase in working capital. So there will be an increase in working capital as current liability decreases. We are not bothered about investment, we are only bothered about creditor because only current items will affect the working capital. So when creditors took over investment, creditor balance will come down. So when creditors decreases, working capital will increase. Third point, stock 10,000 was sold for 15,000. 10,000 stock is sold for 15,000. So the two accounts are stock and cash. So when you sell stock, stock goes, cash comes. I repeat, stock goes, cash comes. That means 10,000 goes, 15,000 comes. So net result, there is an increase in cash of rupees 5,000. So 10,000 stock goes, 15,000 cash comes. It means net increase in current asset. I mean net increase in cash is 5,000. So increase in cash 5,000 will result in increase in working capital. So answer, there will be an increase in working capital as cash balance will increase by 5,000. Next students, income tax paid 25,000. So when you pay income tax 25,000, cash goes. So the two items, the two accounts are income tax account and cash account. So cash goes out. So decrease in cash will result in decrease in working capital. There will be a decrease in working capital as cash balance will decrease. Fifth one, underwriting commission paid 6,000. The two accounts are underwriting commission and cash account. Underwriting commission is an expense and cash goes out. So there will be a decrease in cash because cash is paid. So decrease in cash will result in decrease in working capital. Answer, there will be a decrease in working capital as cash balance will decrease. Sixth one, machinery purchased by issue of equity shares for rupees 60,000. That means machinery comes, shares goes. So the machineries are purchased and for that no payment is made by cash, instead shares are issued. So the transaction is between machinery and equity share. Equity share is a non-current liability. Machinery is a non-current asset. Non-current, there will be no change in working capital. So there will be no change in working capital as the transactions are between non-current items. So students, investment 50,000 were sold for 15,000. So loss is 35,000. In bracket, assume investments are long term, means investment is not a current asset. So when you sell investment, investment goes, cash comes. So there will be an increase in cash. Increase in cash will result in increase in working capital. The two accounts affected are investment and cash. Investment goes, cash comes. So when cash comes, cash increases, working capital increases. Loss 35,000 is not a current asset, not a current liability. So ignore. There will be an increase in working capital as cash balance will increase. 40,000 was transferred from PL account to general reserve. So the two accounts affected are GR account and PL account. So from PL you are transferring to GR. So GR and PL is an internal liability. It is not a current liability. So both are non-current. GR is a non-current item. PL account is a non-current item. So there will be no change in working capital as current items are not affected. Next students. Creditor account for rupees 40,000 was settled at a discount of 5%. 5% students, I think you get 2,000. So 40,000 creditors were paid at 38,000. How you get 38,000? 40,000 into 5% you get 2,000. So 2,000 is a discount on creditor. So students, creditors 40,000 were paid only 38,000. I repeat, creditors 40,000 should be paid, but you pay only 38,000. Creditor is a current liability. Cash is a current asset. Both are current. But carefully analyze the difference, which is excess. 40,000 creditors were paid at 38,000. 40,000 creditors were not paid at 40,000. 40,000 creditors were paid at 38,000. So net is 2,000. That means creditor decreases by 2,000. I repeat, creditors decreases further extra by 2,000. So decrease in creditor will result in increase in working capital. So answer, there will be an increase in working capital as creditors are reduced by 2,000. Amount paid for insurance 7,000 includes 1,500 prepaid insurance. Students, 7,000 is paid as insurance. What you pay? Cash. So prepaid is a current asset. Cash is a current asset. So ignore both because both are current assets. So net you should only consider 5,500 because you pay cash, 1,500 as prepaid. Prepaid is a current asset. Cash is a current asset. Current asset, there is no change in working capital. So you should take the remaining 5,500. So insurance is an expense. Cash is a current asset. When you pay, cash goes out. So there will be a decrease in working capital as cash balance decreases. 1,500 prepaid insurance ignore because prepaid is a current asset. You pay by cash, current asset, current asset, current asset, 1,500 will not affect working capital. So you should look only into remaining 7,000 minus 5,500. You should only look into 5,500. Students, any doubts, feel free to contact me. Thank you.